Welcome to Late Night Stocks. Activision Blizzard stock is down 50%, especially after Q3 earnings. This company had a massive drop due to harassment cases in the company, late launch of the new games, and resigning employees. That's why company is dropping like there is no tomorrow. Should we take that opportunity? Activision Blizzard stock, ticker symbol ATVI, is now at $58 and $45 billion market cap. On the 8th of February, the stock price was $104. Now it is down to $58. Should we buy Activision stock from these levels? In this video, first we will check the latest news, then we will deep dive into these Q3 earnings. After that, looking at the fundamentals of the company, we will look at the big picture, our checklist, approaching the company in different directions like management, growth, valuation, profitability. We will decide if this stock a buy. Let's start with the latest news. Activision Blizzard CEO Bobby Kotick needs to resign right now. CEO Kotick has told executives at Activision Blizzard that he will resign if he cannot resolve company's harassment scandals in short order. But these problems are not easy to resolve by this CEO because Wall Street revealed last week that he knew about the company's issues for years, and these problems include sexual harassment and racial discrimination. However, CEO Bobby Kotick is still not there to resign. Now we are getting some testimonies from employees. Situation is not that easy. For example, one of the employees says, I am seeing people leaving the company, high-level women that are in senior positions are just leaving because they have no faith in CEO Kotick. Maybe you remember in summer some of the employees were demonstrating against sexual harassment in this company. I listed all the bad things. Is there still some hope for the company? Activision Blizzard stock has hard times ahead, but there's still hope. Everybody's blaming CEO Bobby Kotick. They are right because he either ignored or covered up these long-running sexual harassment scandals. Due to that, a lot of people has resigned, and one of them is the highest-ranking female executive. In addition to that, another pressure comes from outside. Microsoft is now re-evaluating its relationship with the company. Everybody is pointing CEO Kotick, but by the time I shoot this video, there is no resign from the CEO. So these were mainly the bad news, but there were also some good news regarding Q3 earnings. Before talking about the stock price, let's have a look at the Q3 earnings results of the Activision Blizzard. The good and the bad from Activision Blizzard's Q3 earnings report. After Activision Blizzard released its third quarter earnings, the stock price dropped nearly 15% immediately. Before deep diving into company's Q3 earnings, I want you to know that company has three divisions: Activision with Call of Duty games, Blizzard with Diablo, World of Warcraft and Overwatch, and the King for mobile games, and one of them is Candy Crush. In the earnings presentation, management announced that Blizzard division will be delaying the launch of two hit franchises, Diablo 4 and Overwatch 2. This means they are delaying the revenues and profits. Investors didn't like that and they sold the company. On the other hand, they provided really strong financials and numbers. The company has raised their revenue outlook for Q4 5% to $2 billion, and they increased their EPS outlook 19% to 75 cents per share. So with this outlook, we are waiting $8.66 billion revenue and $3.70 EPS in year 2021. As I just said, they have one division called King Games with mobile games. I'm sure you all know Candy Crush. Looks like this game is still popular. Candy Crush increased its revenue 22% year over year, and this game delivered a remarkable 46% operating margin. By this strong growth, now this King Games division is accounted for 41% of the company's total operating income. Another bright spot was Activision division. You know, they are publishing this Call of Duty games. Although they didn't release a new Call of Duty game since last year, they are still seeing a strong engagement, particularly with Call of Duty Mobile. This Call of Duty Mobile game has generated more than $1 billion in revenue. New Call of Duty game, Call of Duty Vanguard, has just made its debut on November 5th, and they're also launching a new map for its free-to-play mode Warzone in early December to support this user growth. In general, they had $2.8 billion free cash flow and $10 billion cash, which is really good. There are still important details in Q3 earnings report, and one of them is active users. Here you see the total MAUs, stands for monthly active users. It was 390 million users last year, which is the same as this year, but in the March 2021 we saw this 435 million users as a peak. To see the strong growth in the company, we need to see new peaks of these monthly active users. Here you see also the importance of the portfolio diversifications. If you look at the King Games, the mobile platform, that has the 60% of the total monthly active users. So they're going in every platform like PC, PlayStation and also mobile. They want to reach as much as users possible. When we check the net revenues by platform, 40% comes from mobile, 28% from PC and 25% from console. Compared to last year, mobile is dominating right now. On the other hand, we see a drop in console revenue. However, in this earnings report, we only see the active monthly users till last year, but I want to also show you the previous years. This data is only for Activision division like Call of Duty games. In 2018 Q1, they had 50 million active users and it dropped to 36 million users in 2019 Q3. Then we had a huge jump with online mobile games and free-to-play versions. And with the effect of the pandemic, we reached 150 million users in Q1 2021. We saw this success also in the balance sheet. As I said earlier, they have $10 billion total cash and $3.6 billion total debt. With their strong operating cash flow, they can actually pay this debt in less than 2 years. If we check their valuation, they have 18 trailing PE and 15 forward PE, which is really low. That was the main points of the Q3 earnings and the balance sheet, but let's check the industry as well. Is there still growth ahead in this gaming industry? Here you see the global video game market value from 2020 to 2025. In 2020 it was $155 billion. In this year we will probably close around $178 billion. 4 years from now we are expected to reach $268 billion market value. Let's calculate the average growth expected for the next year. 197.11 divided by 178.37. So in general we are waiting for 11% average growth every year. So it's a good industry to invest in. If this industry grows, then the revenues of the Activision Blizzard also grows. But in the stock price, we see the opposite. I mentioned the reasons like the sexual harassment in the company, problems with the CEO, and the delaying of these 2 hit franchises. But there were actually one more reason why the stock price dropped. That was insider sales. In this graph, you see the insider buying and selling by quarter since Q4 2018. Especially in 2020, we saw insider selling reaching $24 million per quarter. In the whole year 2020, we saw this insider selling, especially also in Q1 and Q2 of 2021. But last quarter, we didn't see any insider selling, but buying. In Q4, maybe we can see more insider buying. That can be also a catalyst for this stock. Before going into stock price target and entry points for Activision Blizzard stock, let's check together previous and estimated earnings. When I look at the quarterly earnings, I see a slowing growth. They just announced this Q3 earnings. In the next quarter, we see a peak in revenue because they are launching these new games mostly in fourth quarters, and that brings extra revenue in this quarter. Although we see a slowing growth, if you have a look at the next year's quarterly earnings, operating margin is really impressive. We see that operating margin is coming from 35-40 levels to 45-50% levels. Main reason why we see that is the recurring revenue. For example, in the last quarter they made $2 billion revenue and $400 million was the product sales, but $1.6 billion was coming from the subscription and in-game purchases. This means, let's say you buy a game from this company for $100 and you spend extra $400 in the game. These extra purchases, subscriptions are increasing the company's operating margin. That's a solid business model. We need to also have a look at the yearly revenues and the profits. Compared to 2021, in 2022 we don't expect much growth in the revenues, but if we check the year 2023, we are expecting more than $10 billion in revenue and $3 billion in net profit. As a result, when we have a look at the big picture, our checklist, the company is profitable with higher profit margins. They have a really good balance sheet with $10 billion cash and $2.8 billion free cash flow. They are in a growing industry and they have still growth ahead. The company has low valuation, they are undervalued, and they are also managing to bring these recurring revenues from in-game purchases and subscriptions. But the company loses points from the CEO board due to obviously sexual harassment cases. They are a good game company, but they are not disruptive because another game company came up and take market share from this company. As a result, the company gets 7 out of 10. If you wanna see better rated stocks like 8, 9 rated stocks, you should definitely check our Flymate series. If we multiply $3 billion by 25 forward PE ratio, then we get $75 billion market cap. The company is now at $58 and $45 billion market cap. If the company reaches $75 billion, then the stock price hits $100. You can ask, what about the analysts? What are their price targets? In this page, you are seeing analyst ratings from banks like JP Morgan, Deutsche Bank, and Morgan Stanley. When we have a look at the recent actions, JP Morgan and MKM Partners downgraded. MKM Partners said sell for this stock and gave $54 price target. If we check the price target of the other companies, it is an average like $90 to $100. Let's check the stock price technically. You can say, okay, but the stock price is still falling and I don't know where to buy. If we check the previous massive drop of Activision Blizzard company, in late 2018, the stock price dropped more than 50%. So we can also see a 50% drop from the top in this case as well. 50% here corresponds to $52 level. If we check the Fibonacci levels, we have a resistance around $50 levels. I understand that the stock price is falling like there's no tomorrow, but it will stop somewhere and I think it will stop around $55. Buying from $55 and selling around $100 can make a 2x 100% gain. This is not investment advice, please do your own research. Before you decide whether you buy or not, you need to consider these points. The company has strong fundamentals and high operating margins, but due to sexual harassment cases in the company, CEO is forced to resign and a lot of employees are leaving the company because of CEO. With these resignations, company is losing the experienced minds. If they make bad management decisions on these games like Call of Duty, World of Warcraft, Diablo, then they can lose their users. If you lose active users, then it is not easy to bring them back. So next few months of the company is really critical. But we also know that we need to be greedy when everybody is fiery about a stock. So you need to consider this risk-reward play really carefully and let me know in the comments whether you buy Activision Blizzard stock from these levels or not. In the comments, please also write that which stock analysis you want next. Thank you for watching till the end. Don't forget to like the video, subscribe to the channel and write the comments.